Welcome to Go Live TV, the future in your hands. The only multicultural IPTV station that brings communities together. Over 2.7 million people have already watched. Go Live TV, anytime, anywhere.
Dear friends, welcome to House Advisors. We're glad to have you with us, and it's been a while since we had aired a show on House Advisors via Go Live TV. We are excited to bring you back the series of House Advisors programs, which will be based on a new schedule that will be on Saturdays live from Go Live TV. So you can download the Go Live TV app to view our show, or you can simply watch it on YouTube, Facebook, and even Instagram. So we're excited to have you back. It's been a while. A lot has changed at House Advisors. And for those of you who are joining us for the first time, I just want to take a moment and explain to you what House Advisors is and what we do and how we can work together and what is this business actually delivering and what it stands for and how you can benefit from it. So House Advisors, basically in a nutshell, is of the people, for the people, by the people. Unlike the government, which is of the lobbyists, by the lobbyists, and for the lobbyists. You know what I'm getting at, right? So in the last few months, we have been under tremendous amount of attack as a small business, and now we are happy, excited, and really looking forward to starting really something new. And we're going to build back real, in a real sense, better. It's not just a cliche, it's actually in a real sense of how we're going to transfer value and how we're going to make sure that the businesses are doing well and how the public can benefit from these businesses that we are advertising and marketing and advocating for. So we are of the people, for the people, by the people. Meaning, we want to bring to you the resources that you need to leverage your assets and to make sure that when you do a renovation project, it is on budget and on time. Recently, we did a survey that showed us that majority of people in the last 15 months have been locked down at home, and they're adding more value, and they're attributing more value to their homes. And they find the home as a sanctuary where they feel safe and they feel comfortable. And I think that's about the only space that they feel free and they can be themselves. So therefore, they're investing a lot of money and they're investing a lot of resources to make sure to prop up the house, to upkeep the house, and to make sure that the house is functioning properly. Now, to do that, they have spent extraordinary amount of money to upkeep in the last 15 months. And if you're in contracting business, you probably realize that your schedule is overbooked. And with the amount of inventory and the amount of building material that's been in lockdown and not available, that has actually pushed the prices up. So what we will see in the market right now, a lot of price gouging. So at House Advisor, we want to deliver not just the services, but also the information that's going to help you to position yourself in a way, in a place where you can actually get the right amount of value for your dollar. Now, speaking of dollar, since we are in an era of hyperinflation because the government keeps printing money and the values of properties are going through the sky, and the realtors are just getting too much excited about the fact that they're doing something magical in terms of selling the prices $300,000, $400,000, $500,000 over asking price, which the credit should go where the credit is due. That credit should go to the printing shop of money, which is at the government, and everything is becoming more and more expensive. Now, why am I talking about all these things getting expensive? Is because when you're in the marketplace and you're trying to renovate your home, you will find out that the price of building materials have gone up, the price of services have gone up, And you can even book a decent contractor. And when you book one of them, and I can speak to you from my experience, they're going to come and they're going to have a whole platter of prices presented to you that's going to just, amaze you. Really, like, it's going to surprise you in a negative way. Therefore, there's a lot of price gouging that's happening right now, and you want to make sure the consumer is well aware. So we are of the people, for the people, by the people, meaning we are on your corner, we are on your side. Now, how can you benefit from this? We have actually, since we were on last time, and we spent a bunch of months in lockdown, we have been reconfiguring our business model. We have been rethinking it, and we have come up with something really extraordinary that's going to make a measurable difference in the bottom line of your finances for you and your family. How? We are going to take the guesswork out of the way, and we have introduced a new service that's going to streamline the coding mechanism. How you're going to get a code for your kitchen, bathroom, home renovation, basement renovation, because we have network, and we have established new networks with a bunch of reputable people and companies that are of the same mind frame, that you want to deliver to you the prices that are right and the projects that's on the budget. Isn't that what you want? Of course, everybody who's doing a renovation understands how important it is for it to be on budget and on time, because when it's not on time, it's also out of budget. So we are taking the guesswork out, and we want to make sure that you can engage on our platform to request for your code. Once you request for your code, we will shop around for you, and this is a new service that we have added. And we'll bring to you 3 or 4 codes that will meet with your budget, will be in line with your budget, and at the same time, it's going to be on a timely, proper schedule. Now, a lot of these guys, you call up and they will give you a code that may be like 3 weeks down the road. A lot of them will come and start a project. I'm not trying to be negative on those good ones, but there's a lot of people that take advantage of this hyperinflation situation. So what is hyperinflation situation that's happening? Why it's happening, and what does inflation means? Well, basically, inflation is calculated based on consumer price index. Every year, the government of Canada, or the Stats Canada, has got a basket of goods and services that, in that basket, there are things such as your bread, such as your daily, weekly groceries, such as your rent, gas, gasoline, the top items or commodities that people use. And they have an index for that. They have a price for that. And every year, that's supposed to be at about 2%. And wages and everything else will be, increasing in accordance to that. Even rent will be subject to that inflation rate. It basically means that whatever money that you have today, let's say you have $100,000, the purchasing power of that money will be reduced by 2% or 1.5%, 2% on an annual basis. This is a normal trend. But what you're really seeing right now, because there's so much influx of money into the market, we are seeing actually the rate of inflation, the real rate of inflation, to be over 5 or 6%. That translates into everything being expensive, from gasoline all the way to the price of homes, building material, and even services. So that's because of monetary and fiscal policy that the government introduces. Now, who benefits from this hyperinflation situation? Well, once you bring in money, right, into the system, you influx or you flush the system with money. That is not really because of a service or product that the economy created. That's basically phony money. What happens is that the value of all the other assets will go up. And people who are not participating in the asset class, such as real estate, such as bonds, stocks, and other derivatives of the stock market, they will eventually lose money. So there will be a bigger gap between haves and haves not. While the official position is so that we create an equitable society, we create an equilibrium, we create an equal opportunity for everybody else. On the contrary, these policies actually exacerbate the disparities that are there. It's going to create a bigger gap between people who can afford rent, or who can afford to live in mansions and have their asset go and multiply 3, 4, 5, 10 times, depending on what are the multiples in the market. So what I'm going to do right now, I'm going to share with you a video or an information video about hyperinflation, and when we come back, we'll talk about how we can work with house advisors, even in this hyperinflated market environment, to achieve your financial objectives and to protect your assets, and at the same time, create opportunities that even in this market, you can benefit and you can strive and you can basically thrive. So without further ado, I would like to have that video played, please. Thank you.
In early 2021, the U.S. government rolled out another massive round of economic stimulus aimed at offsetting the damage done by the COVID-19 pandemic. But there's a potential side effect that some investors and economists fear could actually hurt the economy even more: inflation. Inflation is the rise in the cost of goods and services. Basically, it's how much your money loses value over time. Many economists believe inflation isn't all bad. It typically goes hand in hand with economic growth. And too little inflation, known as disinflation, or falling inflation, called deflation, can be a sign of a struggling economy. But too much inflation too quickly, called hyperinflation, can lead to economic instability and market crashes. While many policymakers and economists think hyperinflation as a result of economic stimulus is unlikely, others aren't so sure. Understanding what causes inflation, how it's measured, and how the government manages it can help you take steps to prepare your portfolio. So what exactly causes inflation? The most common theory is based on supply and demand. Basically, the more money there is in the economy, the less it's worth, and vice versa. In order to stimulate economic recovery from the COVID-19 pandemic, the Federal Reserve and the federal government did things like cut interest rates and send checks to encourage spending, essentially creating money. You can see it in the M2, a calculation the Fed uses to track the money supply. It grew about 15.5 trillion to more than 19.6 trillion from February 2020 to February 2021. The degree of growth is unprecedented in the United States. Some worry that the more money the government floods into the economy, the less each dollar will be worth, starting a spiral towards hyperinflation. The closest the United States came to hyperinflation was during the Great Inflation from 1965 to 1982. During this time, there were 4 recessions, 2 energy shortages, and wage and price controls. The Consumer Price Index, or CPI, which measures inflation by tracking the prices of common goods like food, housing, clothing, transportation, and more, hit a high at one point of nearly 15% year-over-year growth. The higher inflation translated to higher interest rates. Mortgage rates climbed to 18.63%, and the unemployment rate climbed to 9.7%. All these factors led to a stagnant stock market. The Dow Jones Industrial Average struggled to move above the 1,000 level for nearly 2 decades. So, should you be concerned about hyperinflation? Many economists and policymakers think the risk is low. In March 2021, Federal Reserve Chairman Jerome Powell testified before Congress that deflationary pressure over the last 25 years should help offset the risk of inflation. One deflationary pressure is productivity and efficiency gains from technology and globalization. Advances in computing, telecommunications, and networking have elevated productivity and kept labor costs low. And global free trade has let companies seek lower cost materials and labor abroad and use just-in-time production systems to avoid the cost of storing inventories. As a result, employment has been relatively soft since the Great Recession and took a major hit from the pandemic. In January 2021, long-term unemployment was approaching 2010 levels, and wage growth for many workers has been underwhelming. Finally, slower economic growth has helped keep inflation low. Since 2000 and prior to the COVID pandemic, annual U.S. gross domestic product, or GDP, a measure of income for a country, has stayed below 3% annually, keeping inflation low with it. Considering all these factors, many economists and policymakers see plenty of room for the economy to grow before reaching dangerous levels of inflation. However, despite low overall inflation, there have been pockets of rising prices. For example, in late 2020 and early 2021, supply chain disruptions and high demand caused lumber prices to rise more than 170% in just 10 months. The rise in cost of lumber is adding $24,000 to the price of a new home. In February 2021, food inflation for the previous year was 3.5%. Some of this was due to supply chain disruptions, but also rising oil prices, which increased the cost of transportation. In March 2021, the CPI rose 0.6% for the month and was up 2.6% from the previous year. Much of this was driven by a 9.1% spike in gasoline prices. Remember that inflation is part of normal economic growth. Traditionally, the Federal Reserve has an inflation target of 2%. Chairman Powell said the Fed will allow inflation to run hotter than normal to spur economic growth. Powell and Treasury Secretary Janet Yellen have both said the risk of hyperinflation was small and that the government has tools to address inflation if it does occur. However, former Treasury Secretary Larry Summers is less optimistic and pointed to the Fed's past inability to slow an overheated economy without causing a recession. Harvard economist Greg Mankiw warned that the economy may overheat if inflation exceeds 3% for the next 5 years. If you're concerned about how inflation could impact your investments, there are a few things you can do. First, remember that historically speaking, stocks have tended to outpace inflation over the long run. From 1926 to 2020, inflation has averaged 2.9% a year, while stocks have returned an average of 10.3%. This is well above bonds and cash. Of course, past performance is no guarantee of future performance. Next, consider value investing. Value investing is a strategy that selects stocks that appear to be underpriced, as opposed to growth investing, which selects stocks whose prices are based on high expectations for future growth. In the event of hyperinflation, borrowing costs may rise. This may hurt growth companies which tend to rely more heavily on debt, while value companies are less likely to borrow to produce future earnings. Also, consider TIPS, or Treasury Inflation Protected Securities. An initial investment in TIPS increases with inflation as measured by the CPI. In other words, if the CPI rises, the value of the principal invested in TIPS and future interest payments will rise as well. When TIPS mature, an investor is paid the adjusted principal or original principal, whichever is greater. Of course, TIPS are subject to certain risks. They tend to have lower yields than other treasuries. Their value would decline if interest rates rise, and principal adjustments can be taxed before the bond is sold or redeemed. Whether you're concerned about hyperinflation or believe the Fed will be able to keep it under control, it's important to monitor inflation and take steps to help protect the purchasing power of your money.
Welcome back, and we're glad to have you back. As you just saw or reviewed some of the macro and microeconomic aspects of inflation and deflation, we can equip ourselves with that knowledge and information to plan, strategize, and use the right tactics to leverage your asset and your purchasing power. At the end of the day, House Advisors is equipped and is able, at the same time qualified enough resource to help you achieve all those objectives. While our primary focus is investing in real estate and allowing people to renovate, innovate, and have their home, their real estate as an asset that will appreciate and keep the value of it. By the same token, we are here to show you how we can maintain the property in a way that is cost effective, in a way that you can collaborate with our resources to deliver to you and leverage the results and also leverage your purchasing power. Now, we saw in the video that we was talking about specifically about how you can leverage against inflation. That basically means how you can ensure or minimize or hedge your risk. While real estate is the one place that a lot of people buck in a lot of money, park in a lot of money, at the same time, it could lead to a place where it could be overstretched. So what do I mean by overstretched? When there's a lot of people investing in one asset class and there is disproportionate growth in that area, which is above and beyond the inflation rate, which is above and beyond the consumer price index allowance, which is above and beyond the supply and demand cycle, which is above and beyond the proper real estate cycle. It begs the question as to when exactly will this market crash? And if it crashes, how are you going to be positioned in terms of your finances? Now, we are helping here to renovate the properties, to connect with the right resources, so that you can be in a place where you're not over leveraged. If you guys remember the 2008 in US real estate crash, nobody thought that it's ever going to crash. Nobody thought that, yet it did. The reason it did because markets behave in a certain way based on certain metrics, not based on what we feel or how our emotions are about it. So right now, I think, based on the evidence that's available, that we are in a hyperinflation environment. And with the rates being so low, given 1 or 2 years, inevitably the rates are going to rise. So if you're not positioned properly, and if you're over leveraged, meaning you have taken money from your house and you've invested back into the house disproportionately, thinking that this thing will always going to go up in price, you might be in for a surprise. So therefore, not to scare anybody, we are here to leverage those resources so that when you're investing or reinvesting your capital, first of all, the cost of acquisition is the right amount for you, meaning that you're not over leveraging, you're not borrowing too much than you can actually pay back. At the same time, we will deliver to you the mechanism and the know-how as to exactly how you can minimize the cost of renovations through proper, well-vetted and well-tried and true process of step-by-step procedures. So as an extra added layer of security and an extra added layer of information transference and an extra layer of value transference, what we are offering is a webinar systems that will educate you more or transfer information to you in a way that you might not see it someplace else. So that's our unique advantage, because at House Advisors we bring a diverse area of information, expertise, and knowledge, and we converge it into one point, that is to deliver results to you. So therefore, by engaging on those webinars, you will understand and you will get a lot of value. You may be an expert in this area, no doubt. Most people are, to some degree, expert at home renovation and whatnot. But the way you go about it will be uniquely different, and the way you go about it will be based on a different price point, and the quality will be completely different. So even if you engage in that front with us, you will have enormous amount of value, and you'll be the beneficiary of a lot of information that will cost you a lot of time and resource to capture otherwise. So on our website, which is www.houseadvisors.ca, you can go in and join on the webinars, which each week we will be talking about one area of renovation, and experts will be talking about it, and you can get the questions answered, and you can kind of plan the project to be on time and also on budget. The other aspect that we can work together is basically we really realize how much the homes have appreciated, right? Whether it be because of inflation and monetary policy and fiscal policy, whatever factors have contributed to this excess growth in price, we can still look at that and see the cost of acquisition of real estate, how much is it? So last time we checked, it is still legal in Ontario for a homeowner to explore ways and means through which that they can save money while they are listing or selling their property or buying a property. So we will have a webinar which will educate you seriously to understand the layers and the steps through which you can leverage more of your money and pocket more of your money and keep more of your hard-earned equity into the property with yourself and your family. And we'll do a cost-benefit analysis to see exactly how much money is it that you're dishing out every time you're embarking upon an opportunity of purchasing or disposing of a real estate. I mean, we're talking about hundreds of thousands of dollars. So would that be fair to say that you will spend maybe half an hour, maybe maximum an hour and a half to find out the exact steps as to how you can position yourself in terms of saving and at the same time protecting your best interest, which is your real estate. In the subsequent weeks, each week we will bring a topic that is of importance financially, economically, and we will discuss those with experts. And we are working with all the experts. It's not to say that we are not supporting the real estate community. We are actually supporting good real estate communities, and we have a lot of members who are real estate agents, and they will be the ones that will educate you about the exact process of how we can benefit and how we can position yourself, because right now it's astronomical numbers that are coming out, and how you can position for yourself to not be taken advantage of in terms of putting an offer and being outbid for with the offer, and how you go about securing the financing for your real estate project, be it for your personal family use or for investment. So these are the stuff that are in the pipeline and we're working on, and they're available right now. And you can go to www.houseadvisor.ca for more resources, more free resources, tips, and know-hows. At the same time, we have a portal that you can request for quotes, and you can put your projects, be it home renovation, complete home renovation, exterior, interior design. We have all the resources at your fingertips that you can go in one place with confidence to request that. And like I said, while you're away for a few months, we have reconfigured our business model to deliver more resources and take the guesswork out of the way. While we are focused on home renovation and home advising, we are also looking at the bigger picture in the macroeconomic level to see exactly what is happening in the marketplace. And I'm sure and confident that you want to be engaging with a company that's got a really in-depth knowledge of what is happening in the micro and macroeconomics situation economically, and somebody who's got the eyes and ears open for you to do all the research, all the legwork, to make sure that you and your family are in a better position financially when you're working with houseadvisors.ca. So at the end of the day, it's about how much money you're saving and how much information you're getting and how you're positioning yourself. At the end of the day, that's what we're all about. Of the people, for the people, by the people, expert advice. And the advice that's actually very expensive. If you were to get this kind of information advice, you have to go find individual experts in each area. Well, we bring the experts to you, and next week and the weeks after, we will be interviewing them. And stay tuned with us on a weekly basis. And make sure you engage on our socials, make comments, reach out, and have any questions, just shoot us an email or just on the socials. We'll be more than happy to respond to your questions and guide you along the way, and perhaps introduce you to the right individuals and companies that can deliver what you want, at the time you want, and the price you want, and the budget you want. All right, so right now we're going to take a small commercial break, and we'll come back and we'll talk about one pivotal area of renovation and how it's over leveraged and how we can actually benefit from working with our experts. Thank you. Welcome back. Glad to have you back. So if you've been with me so far, we're talking about several topics, macroeconomics, how it's going to play out and how it's going to impact your bottom line, and where House Advisor is and what House Advisors is basically of the people, for the people, and by the people. And we will be live every week to deliver to you special, valuable content that you can benefit from. And next week, we have got a great show for you. Before the break, I mentioned something that we will be talking about, a pivotal issue of home renovation, which is the central piece of every home, which is the kitchen, and how that kitchen renovation can impact the quality of your life and your health, and also the quality of your budget, basically, and your wallet. So we will be talking about that next week. And also, I mentioned a lot about leverage and over leverage and all this terminology, but what do I mean by over leverage? So for example, if you're buying a home in GTA right now, it's in excess of $1 million average price, but there are pockets of real estate that are available that you can take advantage from that. And when it comes to real estate investment, we'll be talking about rate of return on investment, and regardless of where the geographic location is, how we can position yourself for two things: cash flow and capital appreciation. And this will be the topic that we'll be talking about next week. Looking forward to see you next week with an exciting show and a very informative show. Meanwhile, www.houseadvisor.ca is the place that you can go and get all your resources. Feel free to reach out, make comments, and engage with us through socials. And until next week, God bless, and take care of yourself and your family.